Hi guys, we're back. I'm Roy Kuzin, partnered with Light Forex Broker. This is our weekly educational session where I literally hand you my top level trading techniques, tactics, strategies with one purpose in mind: to help you make better trading decisions, which as a result would make you more profitable over the long run, and that's the bottom line. Today, I'm going to talk about one of my top favorite topics, I would say. It is, I believe, one of the most important trading techniques that is hugely overlooked by the trading community. So most traders are actually completely oblivious to this trading technique, and I just find it to be crucial. I mean, I use it not only on a daily basis, but this is really a fundamental part of my trading activities. What I'm referring to is the closing bar, right? The closing bar. Just think about the closing bar as the equilibrium of price action. Basically, it's like the agreement between the sellers and the buyers. It is if as if the sellers and the buyers at the end of a trading session have agreed on a specific price, and that's where it got closed. So it is the balance of power between the bulls and the bears, and it has huge implications, and it's extremely important not only to understand it, but also to harness the knowledge, the information, and take advantage of it. So are you ready? Let's go ahead and take a look. Alright guys, so you're looking at the daily chart. This is the S&P 500, right? Real time. I chose this asset as a case study because it's close to my heart. I actually have a bearish position in place with the S&P 500. Just a couple of days ago, just a few days ago, I've published a very important piece of content video, market analytics video. Take a look, go ahead, look it up. I was specifically talking about the S&P 500 and the possibility for a huge downside move. And I did that. I've built up this bearish conviction actually quite about a week ago. Based on these techniques that I'm about to show you right now, right? I mean, not only, but mostly based on these techniques that I'm talking about. And first, I want to discuss a little bit about the background, well, the basics of this technique. So, what you want to have in place is always, at all time, is a reliable set of support and resistance levels. And this is outside of the topic of today, right? The topic of today is the closing bar. But what I'm talking about right now is you can't use this trading technique if you don't have a set of reliable support and resistance levels. Now, it could be, there are a few systems that you can use. If you go on and search online, you can find Gann, you can find Fibonacci, you can find pivot system, market profile. There's lots of systems that you can use. I'm using the symmetric system. I find it to be the most reliable set of support and resistance levels. And once you have that in place, once you have a reliable set of support and resistance levels, I'll just call it a system. Once you have a reliable system in place, then you can start and use this. It's actually an amazing phenomenon, and like I said, hugely overlooked by the trading community. So when I talk about the closing bar, what I really mean is the closing day, right? The close of the day, right? When we talk about the closing bar, we're talking about a specific session. Everything from daily and up, right, is starting to have an edge. So what I mean is everything below daily, 4-hour chart, 1-hour chart, There's not an official close to that session. However, on the end of the day, even though we're trading 24 hours, there's still an official moment of close, which is, like I said, like the equilibrium, the agreement between the buyers and the sellers. And on a daily basis, we're talking about 12 GMT time zone, London time zone, 12 p.m., right? 12 a.m., sorry. So at 12 a.m., a trading session, a daily session is ended and starts, the next one is beginning, right? And the same, well, so, in a daily time frame, a closing bar could give you an edge of about 60% validity for, I'm talking about probability-wise, right? For example, if I have a strong key level that got broken with a daily close, that's an indication that it was a genuine breakout and price will continue on the same direction. However, the daily bar is still very noisy, which is why it only gives you a slight advantage. I calculated that it's about 60%, right? Everything below daily will give you 50% and down and below. And that's not interesting, right? 50%, there's not an advantage, any advantage in 50% or below. We only have an advantage when it becomes above 50%, right? Significantly above 50% would have to be 60 and up. So the daily close gives you that 60%, which is a good way to start with. That's a good basic point to start with. Then you can add up a few technical elements and reach 70% or 80% probability, and then you're in business. So the daily has to be taken with a grain of salt, the daily close. It's an indication, but it only gives you 60%. If you want to take it higher, then you have to reconfirm a close by the weekly close. You'll have to wait to the end of the week just to make sure that the weekly close got closed, beyond a specific and important key level. So a weekly close will give you a 75% of success, probability for success in your conviction. The only higher time frame than that would have to be the monthly chart, right? And the monthly close is hugely important. So as you can see, as we go up, there's higher authority, so to speak. The daily is the basic, is where we start with, but the weekly close is higher authority, stronger, more important, and is just as well with the monthly close. The monthly close is so strong with, is so strong of an indication that it actually gives you about 90% of probability. Alright, but it is important that you have a reliable set of support and resistance levels in place. Now, I'm going to show you, after this pretty long preview, I'm going to show you what I'm talking about. So, this is the daily chart, S&P 500. And I'm going to show you how I came about to establish a bearish position, very successful, by the way, that I still have open as we speak. So, this is how everything started. I noticed that price was starting to trade sideways. Now what we're talking about, this is really the big picture, right? This is the weekly chart. You can track back here all the way to roughly the middle of 2016. But what I was mostly interested in was what started to occur at the beginning of 2018. I noticed that price, up until the end of 2017, was moving upwards in a nice fashion, right? Pretty nice upside trend, but at that point it started trading actually sideways rather than an upside formation. I saw the first leg going down, and then the second leg went up, took the previous high, and started to turn around. This is the moment I became interested, because I thought there's a very good chance that what will happen is the price will just form a third leg here. We had first leg here, second leg, and it looked like a potential sideways movement on a huge scale, right? If you break down the legs here, every leg could be considered as a trend, right, on its own. So I thought there could be a huge move all the way down to the lower section here, right? This is my set of support and resistance levels, right? This is my system, the symmetric system. Now, I was mostly looking at this particular level because it is the official trigger level. Price, it's not enough for me to see price just begin to turn around, right? It's not enough because it could turn around and then continue on the upside. We don't want to have that. So I had to use this particular level as a trigger level. But here's the trading technique. Here's where it kicks in. It had to be, price had to close below that level, 27.95. It had to show that by the end of the week, when the bulls and the bears come to an agreement on price level, they will agree that price is below 27.95. Like I said, I could use also the daily close, not just the weekly close. Just the weekly close is stronger, much more important. Will give me 75% of probability. Now that's a big number that I can work with long term, right, and succeed. So let's take a look at the daily for a second here, right? Just remember this level, 27.95 is the level we're talking about. I'm taking you to the daily chart, and I was waiting patiently, because I was waiting with the finger on the trigger, waiting to pull the trigger, establish a bearish position, but I wanted to make sure, because, you know, the downside moves in the stock market, and that includes the indexes, right? S&P 500, NASDAQ, Dow Jones, is a tricky business. Downside moves are very elusive and tricky and dangerous. So it's more risky to be on the downside of the stock market in general, which is why I'm using extra cautious. So I wanted to have this 27.95, which was the main point of reference, right? The trigger. I wanted to make sure I at least have a daily close below that level to start and acknowledge this as a potentially strong bearish opportunity. And it did, right? As you can see here, it did close on it was on the 10th of October, 2 weeks ago. It closed right below that level. This is where I began to establish the position. I started very small at the beginning because I know that the daily only gives me 60% of probability. So I knew that in order to increase the position, I gotta have that weekly confirmation, right? So what I had, take a look at the weekly close. Here it is. This was the weekly close on that same very week. So a day later, the weekly confirmed that the level is broken. And I thought this should be a level of a point of no return, kind of a pivotal point. Once it gets crossed, price doesn't look back. It just continues to the same direction. This was, this was the main issue here, because I'm using a set of reliable support and resistance levels, and I'm using the closing bar technique to give me just better probabilities with regards to the next movement. So I had that close here. I started small, right? I established a small bearish position. Then what happened? Price went straight up, straight against my position. It was a very small position, so it didn't really hurt me, and I was actually expecting it. You know, after every strong move, you get kind of a temporary correction, right? A local correction. It's something you have to know how to handle. Right? You have to know how to live with. This is why I'm starting small. And take a look what happened right after I got in, which was roughly around this point. Price began to move strongly upwards, and what it did, it actually broke back above the 27.95. Now, usually that could be a reason for concern, right? However, I have a lot of experience with these trading techniques, specifically these. So I knew that the daily is usually noisy. It carries excess noise. What I wanted to make sure was how the weekly close is going to end. And if price will come back down and end the week closing below that level, I'll know that this wasn't a genuine breakout, but rather than just a false breakout, and we're still pretty much on the downside. Now, so I waited with my small position in place, even though I was starting to have, a small loss here. Just a couple of days later, price came back, and I waited at the end of the week because that's what was important. And lo and behold, this is how it ended. Take a look. And this is basically, right? So price, as you saw on the daily, broke. It broke on the daily, right? But the daily is noisy. When you filter out the noise, looking at the weekly close, the only thing you see here is just that spike. And that's very powerful stuff. That actually acknowledge, or should I say re-acknowledge, the weekly close we had just a week ago, right? It's like a stamp, which takes it even to higher numbers than 75%. At that point, we probably reached 90% of probability. So what I did, boom, I hit the nail right on its head. I increased the position. All right, so this is what I'm saying here at the, a closing bar technique. This is how you use it. This is how I used it very recently, just right now, on the S&P 500. In this case, I plan to hold the position a little bit longer till we hit the level of 26.12. That's my official price target. As you can see, that is also the next natural key level, right? Now, let me show you another case study, very interesting one. If you notice, you'll see that all the case study I'm showing you, I actually have real open positions in. So I'm not only showing you past, price behavior and giving you examples on past behavior, but also on current behavior, which is even more, much more interesting and important. Now here I have a massive position actually on the dollar versus the Swiss franc. I was able to build it up over time, but I did it just because I was using that very same technique I was just talking about. But I want to show you how everything started, right? I was looking at a massive sideways movement that had started to form roughly at 2015. Now, I'm not talking about the fact that I was starting to look at that trading range back at 2015. Of course not. Every trading range has to have at least 2 to 3 legs in place to be considered as a, fairly established trading range. Only then I can start acting upon it. So I actually started to follow up on this particular trading range roughly around the end of 2017, when I could clearly see well-established 3 legs, right? Actually, the third leg, the edge of the third leg, when it touched base so nicely here, on my bottom key level, which was 92.35, definitely convinced me that the setup is highly, highly valid, right? And I should trust it, because price just proved that it is trustable. So I started to follow up the next upside move. Now, bear in mind, this is a monthly chart. Every single leg here is the major trend. But I knew I had the major trend going upside, right? The dollar is going to outperform the Swiss franc by a huge stretch, if that's the implications, because it did touch base on the bottom key level. From this point, it should change direction and go straight to the other side, which is the upper section. So I started to trade in and out, but only on one direction, upside, because I knew the major trend is upside, is upward, is going upwards. And here's what I did. I want to show you what I just recently did. After having a position, a very successful one, for a couple of months, Price went on a downside correction, but take a look at this. This is where the technique is kicking in strongly. I noticed that price had stalled, right? It went up strongly. I was very much involved here. I've made very well. Then price stalled and began to drop. I quickly pulled out. I pulled out and I knew that what I'm looking at is a technical correction. It is expected. After such a strong upside segment, you can expect a downside correction. But here is what I was also expecting. I was expecting this level here, this key level, mid-low key level I call it, the 96.51, to hold as a last line of protection, last line of defense. I knew that it is a powerful support. So what I wanted to see is if price, well, if this level can break the downside momentum. Now I'm going to take you to the daily chart. I want to show you how it looked like from the daily perspective. Because from the daily perspective, it was a huge violation. It was a huge breakdown. Here's the level. Take a look, 96.51. So from the daily perspective, price just almost had zero respect for it, right? It completely broke it and actually spent a few days below that level. So for an untrained eye, this may look as a breakdown, but I already know the tricks of the market. So I wasn't really excited. I didn't really get I didn't really get excited about this particular breakdown. I thought this might be just a fake one, right? So I waited, and then I saw that even on the weekly, it closed below 96.51, but I reminded myself one thing, that the setup itself is a monthly one. So if it's coming, if the support and resistance system that you have is applied on the monthly chart, then you might as well check the monthly close. That's more important. Now, if you have your setup sitting on a weekly chart, yeah, I mean, the weekly close is also probably very, very important, right? But I knew that the setup was monthly, and when I saw that even the weekly was closing below, I decided to wait to the end of the month. Now, what I wanted to do was to reestablish a bullish position, but obviously I'm not going to try to catch a falling knife, right? What I want to have is price showing me that it was unable to break 96.51. Unable to break, meaning unable to close below. So when I waited to the end of the month, in the meantime, I was just trading other trading opportunities, right? Nothing is, as far as I'm concerned, and that's a mentality, nothing is of an immediate attention. Nothing is urgent, right? Usually when I find myself chasing trades, chasing opportunities, these are the spots I lose, mostly. So I always take that under consideration. I never try to do things rapidly. I just waited and I did other stuff. But I waited at the end of the month. And then I noticed this spectacular phenomenon. And it's not rare at all. It actually happens all the time. Although, obviously, I'll say it again. Only if you have a strong support and resistance system in place, right? Otherwise, it won't work. So I was watching this 96.51 as the month, because price was here, right? Price was here for most part of the month. It was trading below 96.51. But as the month progressed and came to its end, everything turned around. Price completely changed direction and started hammering upwards. And what it did is it left this spike here, right? And closed the monthly bar above 96.51. And these exactly are the moments I'm looking for. When I saw that, I knew that the downside correction, right, the same downside correction that corrected the previous upside move was over. And what it means is that we're about to see the next upside move, right, the next bullish move. And that's the moment I took massive action again. I reestablished that same position. So, and by the way, from the daily perspective, here's how it looks like. This is the correction I was showing you on the monthly chart, right? As you can see, this was the moment of the spike we saw on the monthly bar. But take a look what happened later on. Later on, as you can see, price began to move upwards quite strongly. But from a daily perspective, I had a second setup. I had the second set of reliable support and resistance system. This time it was this level, 98.51, that I was using to, well, to capitalize on some of the positions. So what I did when price was starting to come off, I closed out most of the position, but then I saw this particular reaction. Take a look right here. When price just touched base on the 98.51 key level here and bounced back, closed above, and started to turn around. Whenever I have this type of movement, right, this type of engagement against a strong key level and price begins to turn around, this is the moment to strike. So I went back and re-increased the position again, and I did that all along, right? I kept increasing and increasing the position, and as you can see, I'm having a big position at the moment. Actually, the price target is not too far from where we're trading right now, so this one goes really well. I actually have one more really fascinating case study to show you before we leave. All right, this one would have to be the crude oil. And also, by the way, you can go ahead and check out one of the market video analytics I gave here probably about 2 weeks ago. Just 2 weeks ago, price was actually right here. And what I said was that there is an imminent, full-fledged downside reversal move in the pipeline for the US crude oil. And not only that I said it, I backed it up with a few positions of my own, short positions on the crude oil. But forget about that. Here are the reasons that drove me to the conclusion that we're going to have a massive downside move, a massive downside reversal. Because if you think about it, take a look, we got a beautiful trading range here, right? We got the downside leg, downside leg, upside. Every single leg is a huge move, right, in itself. Just take a look at the last one, the upside one, right? The 1, 2, 3, the fourth one, from the 16th of August to the 1st of October. So we're talking about a month and a half. So quite a significant move, right? So I knew that if price is going to turn around, it will most probably go back to the same, roughly the same levels it came from. This is the nature of a trading range of sideways movement. But what I needed was a strong sign. Now, here's the system. Here's how the system works. I actually have two different sets of support and resistance levels. The big system, this is the black one, represents the bigger picture, and a local one, which is the blue one. Now, the second one was actually helping me to fine-tune the very entry, by providing a trigger level, a trigger system, if you will. So at the beginning, what I was mostly interested in was I had to make sure that price was unable to break above 75.08. I'm showing you this level right here. This is the top key level of the black system. This is a huge resistance level. And when price began to close in on that level, this is where I started to watch very closely. I knew that this is a massive resistance. And I knew that price may seem to be breaking it, but in fact it won't. Right? And that's exactly what happened. I mean, it actually started, seemingly breaking that level with the daily close. It closed a few bars outside of that 75.08. But when I filtered out the close with the weekly chart, this is how it looks like. Take a look. just that spike here hanging outside of that 75.08. So when I saw that, I knew that, you know, this daily close, the close that we have on the daily here outside of that 75.08 was probably false, just, you know, probably was not genuine, was just excess noise. Then I saw a smaller scale trading range starting to form, and I love that when that happened, because that actually gives you another tool to fine-tune your entries, but also to higher up the probability of your move. So I quickly watched the 4-hour chart. This is where the blue system is coming from. It's actually a 4-hour formation. Now, if you think the daily is wild, you know, the 4-hour is, you know, is really wild. Is off the charts wild, right? I mean, I'm not talking about the 1-hour chart and, you know, the 15-minute charts, the 5-minute chart. They're complete. This is Formula 1. I'm not talking about that. That is pure noise, by the way. But if the daily is noisy and gives you only 60% validity, the 4-hour is very noisy. So I don't even look at the close of the bar on the 4-hour. But I did have to acknowledge that it comes from the 4-hour chart, that particular trading range. I'm talking about this one, right? Have no mistake. 1, 2, 3, right? 4. So here's what happened. Obviously, it closed above and closed below, but it's not a real close. It's a 4-hour, right? There's no close in the 4-hour session. So I went to the daily chart, and here's how it looked like. Take a look. Remember those violations we saw in the 4-hour? This is how it ended. Here with a spike, right? On the downside with a spike. It didn't come out of the 73.82. So I knew that the 73.82, once I saw that spike here and price was coming back to close above, I knew that this was my official trigger level. So I needed a daily close, at least, right? Just to begin with. I needed a daily close below 73.82, and if I'll get a weekly close, I'll increase the position all the way through, because I had a clear price target, which was 65.61. By the way, we're very close to that price target. I actually adjusted that price target even further ever since a few days ago, but that's out of the point right now. So I saw that 73.82 as my main trigger level, because that's a local support, but it showed to be quite formidable when it completely broke the downside momentum. But then what happened? Price began to turn around, and it was for some time trading above the next one. Take a look at the next level, 74.57. So for most part of the day, it was trading above that level. But then I noticed price just came back all the way and closed just right below that level, right on the spot. You know what? Let's take a look at the close. Take a look at the close, 74.54. The level is 74.57, the key level itself. This was a huge indication. It was an indication that although price was unable to break below 73.82, the fact that it's unable to break now the resistance, the imminent resistance above at 74.57 suggests that we're going to have a second attempt on the 73.82, and usually second attempts are successful. So when I noticed this, take a look again, this particular behavior, the fact that these two spikes unable to close, price just unable to close above 74.57, this is where I took action. I started small. Then I noticed the daily close well below 73.82, very decisive close below 82. This was, of course, the official moment where my bearish conviction got triggered. So what I did, I increased the position. And then what happened? Price went straight to the next key level. Take a look, 70.61, and beautifully touched base with a bit of a spike there, right? When I saw that, I took most of the position out. I took a massive profit basically. From 100% position size, I decreased the position to about 30%. Then I saw price was starting to trade sideways a little bit, but I knew that if it's going to break below 70.61, that's going to be a huge indication that we're probably going to continue on the same direction, this time to the next one, 65.61. As you can see, what I'm giving you right now is really hot stuff, right? Real-time stuff. Actually, it didn't even reach yet the 65.61, which was my official price target. Right now, it's a little bit lower than that, but forget about it. It's still a massive profit-taking spot, have no doubt. I'm going to take a lot of profit at that point. However, I waited with my small position. At that point, 30%, I believed in the trend, in this downside trend, right? I believed in it, but I needed to have the confirmation to take it back up to 100%. And a few days later, I got it. Take a look. Yet again, I'm going to show you. We had that close right here, right? Below 70.61. So this is where I moved back in, full power, got up the position to 100% again. And price continued the way down. And basically, I'm still in it, waiting to hit the 65.61 to take some profit and then continue even further down. So now you see how I'm using this particular closing bar as, both for defensive purposes, right? Defensive purposes. I just showed you how it closed. It was unable to close below 70.61. I took massive profit, and price was actually going in an upside correction, right? So both from defensive point of view, but also from offensive standpoint, right? I use these daily close to get in the position, but also to get out of the position, as long as they engage with an important key level. All right, guys, I think that's about enough for today. I think it was quite intense. I hope you enjoyed the session. I sure did. Very important topic, the closing bar. Like I said, overlooked by most of the traders. So there you go, important stuff. I wish you a great trading week. We'll see you next week with our next session. Take care. Bye-bye.